Welcome back to the Make Account Podcast.
I'm Marcus Mire, founder of Mire Group CPAs and the Total Control Accounting System.
I'm Tyler Woerner, small business owner with a lot of accounting questions. And today,
You got some questions.
I've got some questions. Literally, this podcast came from like 4 or 5 questions I sent Marcus in an email this week because I've been indoctrinated, right, in all these accounting practices, and I've realized I need to dissolve an S corp and start an LLC.
An LLC that's not electing to be an S corp.
Exactly.
Yep.
And so we're going to talk a little bit about kind of the do's and don'ts of shutting down a business
Yeah.
and then opening one and kind of that transition because, if you're in business long enough, there's probably going to be a time where you need to do that. And,
Right. Yeah, I think it's like, excuse me, what we call in our profession the traps for the unwary. Like the things, I think, which is what prompted your email, was like, okay, I'm not sure about all these things, but I know there could be some ramifications if I don't hold my mouth
These
just right.
seem things like the perfect opportunity for them to just pounce on me with a bunch of
Penalties
forms
and notices. And look, and this is no like commentary on that whole system. It is what it is. When you deal with government agencies and you don't file certain forms with them or you don't close accounts, like they come after you, they're bureaucrats. That's just how it is. So what we hope to talk about is how to navigate that, what happens, what you can look for. I think this is something that everybody's had to deal with where even if you're thinking like, okay, I have a sales tax account I don't need anymore, these same principles are going to apply.
Yeah. All right. So I guess start there. What do I have with the government? That's,
Okay.
I mean, like,
All right.
like that might just help me understand because you mentioned I've got these accounts that they're looking for.
Oh, yeah.
What are they?
Okay, so let's take
What kind of situation?
What did you get yourself into?
Yeah, exactly.
So big picture view is you are an LLC, a Louisiana LLC, that has elected to be taxed as an S corporation for federal and state income taxes. Okay, so you have a federal tax ID number, but more importantly, because you're an S corp, you have to pay yourself a reasonable wage. We've talked about, if you listen to the podcast long enough, we've talked about that.
Yeah.
S corp owners that are employees of the business have to pay themselves a wage. Okay, so if you have to pay yourself a wage, that means you have payroll tax accounts. You have federal and state payroll tax accounts. Well, if you close the business, you're obviously not filing payroll tax returns anymore, but you need to tell them that, specifically the state. And as we're talking through, I could think how when we file your final S corp return, there's a box on the return that says final return. You would think that would tell them to close everything, but I'm not sure if it does. And let's play the example forward. Let's just say we don't file that return until March or April.
Yeah.
After, let's just say it's April, after which the first quarter's already been done and they're looking for a payroll tax return from you. So we need to close those accounts because they're looking for, if you have payroll, quarterly you send a payroll tax return to the federal and state governments. Basically, it's like a reconciliation. What did I pay my employees and what did I withhold from them and what did my taxes do?
So is that something like a CPA needs to do? Or is it?
I would say
is it like calling Comcast trying to close your cable?
I would say harder to do it with the federal government because one, you can't get them on the phone.
Yeah.
State government, I've seen it easier, but a CPA can just tell you, like, kind of guide you through the process.
You mentioned there's a form. I didn't know if you're like, oh yeah, you fill out the 73 I-9.
Well, what's funny? Like on the payroll tax side, you really should mark your fourth quarter reports. So this is like you have Gusto. Kind of getting off track here, but you have Gusto for your payroll. We've talked a lot about Gusto. One of the things I'm going to tell you is communicate with your rep at Gusto to tell them, hey, I'm dissolving this company. Make sure you check the boxes properly in all these forms to say I'm not filing any more forms. Because the worst thing that can happen is we get 4 months down the road, we haven't filed, and they send you a notice, hey, you didn't file your first quarter.
Right.
And even if you deal with it, it's still something to deal with.
Yeah. So I think the takeaway here is you've got an I don't even know what to call it. It's not an account. You have a payroll account.
You have a payroll, yeah.
A payroll account for the federal government, and then you also have an EIN number, tax ID.
Correct.
But that's not necessarily an account.
Yeah, I think once you file the final return, they'll shut down the EIN.
Gotcha. So they dissolve that. Okay.
But the state, you need to tell them, hey, I'm not filing anymore so that they don't expect a return from you. And what states love to do is they just send you a notice and say, hey, you didn't file. it should be $1,000. Tell us why we're wrong.
Right.
They just literally. You've seen this before.
Yeah, that's happening.
So the whole point of where this discussion came from was you can save yourself a lot of trouble and heartache if you just get somebody to help you through this process, or just tell you the things to look out for.
Yeah, and that's done quarterly.
Yes.
Okay, so if you're mid-year and you're like ready to make this change or whatever, it doesn't have to. I've kind of like
to shut it down.
Yeah,
you're making a clean break.
Yeah,
yeah, but you could in the middle of the year be like, all right, June 30th, I'm done. I'm shutting this company down. I don't have any more payroll.
Yeah.
When I file my June 30th payroll tax returns, I'm marking them as final
Yeah.
and saying I don't have any more payroll.
Okay.
And as I'm saying that, I don't even remember the Louisiana return if you could mark it final. Like you might have to. I'd have to look into it. Is my point. Like I'd have to look and see if there's a place you can mark, or you have to call them or file a form online.
Yeah.
They don't make it easy. I will say that.
Okay, but you need to make sure those things are done.
You need to close the accounts because
Okay.
again, they're looking for them, and they will just the burden of proof's on you. They'll send you a notice. Hey, you didn't file. We say you owe $1,000. Tell us we're wrong. And
Yeah.
even if you ultimately prove them wrong, which you probably will, it still
Yeah.
takes time and effort,
Yeah.
which is a pain.
Right.
Yeah.
Okay. So that's kind of the situation. The tax ID, federal, payroll accounts are both federal and state.
Right.
And you got to make sure that you get in touch with them to shut it down.
Correct.
And then I guess you just hope and wait that it's been shut down.
I think a lot of times they'll send you the federal. I don't remember ever getting anything. States will send something to you saying we've effectively closed your account of this.
Yeah. Okay.
Effective this date.
Gotcha.
Yeah.
All right. So now let's talk a little bit like my situation. Part of shutting it down is I'm moving from an S corp to an LLC mainly because of the tax compliant issues, like
Administrative costs.
Yeah, the administrative costs. I don't have any actual employees anymore. The whole and we talked. I might benefit more from the QBI
Look
than
at
the.
you, dude.
Oh yeah, dude.
Look at
I'm about to. Tables are turned, my friend. I might benefit more from the QBI than the actual S corp deduction.
It's music to my ears right here. Just keep talking.
So yeah, I've
Yeah, you are. So a little backdrop to that is that S corps are administratively costlier than an LLC that is not. So just to kind of recap,
Right.
if you remember listening to the earlier episodes, an LLC can be an S corp. It's an election you make at the federal level. But if you don't make an election and you're the only owner, it's a disregarded entity, a sole proprietorship.
Yeah.
And so that's what Tyler's talking about, is that he's moving from an LLC that's an S corporation, which you have to file your own separate tax return. You have to pay payroll.
Yeah, and I'll just say, I mean, the camel that broke what's the phrase? The straw that broke the camel's back was the state kept screwing. I don't know. I don't know if you could explain.
Yeah, I mean, I don't want to get too much in the weeds, but basically the state unemployment office, which you have to file with quarterly, couldn't figure. They got your tax ID number wrong. They kept sending us notice. We couldn't process payroll in Gusto.
But anyway, it was another thing that was like, you know what? There's just too many variables that I don't need.
Correct.
That you're exposed to.
Yep.
That there have been times in my business where those were just costs of doing business.
Yeah, the benefits of the S corp far outweighed them.
Yeah, the juice was worth the squeeze.
You're quoting me there.
Yeah, exactly.
Okay.
Yeah,
I appreciate that.
So now it's not. Anyway, we're moving to LLC, simpler.
Yeah, literally no. So he was, paying, to bring their example forward, you're paying Gusto, you're having to pay payroll tax. I mean, you're still going to pay payroll taxes in the LLC sole proprietor world, but everything just becomes simpler.
Right.
Your taxes probably will go up slightly, or I could even argue it'd be a tax wash. But you don't have to pay Gusto. You don't have to pay us to file a S corp return. It just gets easier for you. So it's that's back to that use case of just not everything's cookie cutter. Not every S corp is right.
I'm not saying S corp is right or wrong or whatever. I've done both. There was a time when it makes sense. It no longer does. And here we are.
That's right.
So a couple more questions that kind of might expose kind of what people wonder about. What about moving money from from a closing business to a new business? What does that look like? What are the just the calling it owner's draw, walk us through that.
Yeah. So when you close, when you're going to close yours, we're just going to take the cash out of the bank and it's like a draw. And since you won't have any debts and that's all paid off, it's not really a taxable event. It's just a return of your capital.
Yeah. What are some general things people would need to know when they do that, though?
Well, people would need to know, especially in an S corp, they would need to know that if they are taking property out, that it's a taxable event to the extent that property is worth more than you paid for it.
Okay.
That's the biggest thing.
So,
Biggest thing
like
with liquidate.
assets?
Yes. Perfect example. I bought a car in my S corp, and I took depreciation down to where I bought it for $40,000. I wrote it down to zero, and it's worth $15,000. When you go to shut that S corp down and distribute that car, essentially liquidate, that's a $15,000 gain on the liquidation of that S corp, because that when you liquidate an S corp or distribute property, the tax law says it's like you sold it at fair market value. So that's something to really be aware of.
Yeah.
For you,
Yeah, I got no assets.
you got just a pile of cash. Pile of cash, baby.
Yeah.
That we're distributing. But this it's hard assets. Hard assets you have to be aware of. Do they have a built-in gain? Basically, their value is worth more than what you're showing on the books, i.e. what you've depreciated them down to.
Okay. So property.
Think about like most people, it's stuff that you could argue it's not worth much. Old
Yeah.
computers and
Sure.
furniture.
But those haven't been depreciated
Well,
necessarily.
they probably have, but they're probably so
Okay.
old, you could make the argument like, really, what's it worth?
Okay.
But if you got a 2017 Escalade on there and you're like, okay, I'm done with this S Corp, might want
Yeah.
to think about it.
Okay.
Yeah.
What would the move be other than just
What would the
take
move
the
be?
bill?
Keep it open, let that thing depreciate economically, and then distribute it later. 'Cause that's a whole other
okay.
podcast.
Gotcha. All right. So there are some cases where it's like,
Yeah, you just don't want to. You don't want
isn't worth the squeeze.
That's exactly right. But you do not want to distribute, or at least you want to be aware of
Yeah.
assets that have a value more than their cost on your books.
And I think all of this is kind of just summed up with the talk to a CPA, and that's
right.
why, right?
That's right.
Because, you don't want to go. I started to just go down this road. Everything's accessible online. Of just like,
Right.
all right, let me start filling out all my paperwork and doing this, and then I was like, oh, you know what? I've been warned.
Yeah,
I've
something
been
tells
warned.
me there's a trap here.
Yeah, exactly.
Right.
I'm gonna start getting all kinds of notices and things like that.
Yeah.
So, all right. So those are some things to consider. But other than that, it's just a matter of it's basically a draw. It's a liquidation, and then
It's a return of capital.
and
That's,
then
that's the way I would say
and
it.
then anything you'd put back into a new business
It's a non-taxable event.
yeah, it's an owner's contribution.
Exactly right. So it's not income to the new entity. It's just capital contributed, and you're good.
Yeah. All right. So maybe clear up some of this stuff too, because I don't know that I understand this very well. Like, help us understand the tie between like when you get a tax ID and you register with the state to like, does that automatically mean they're going to be like, okay, now you started, you're in business, we should expect all these things? How does that work?
My experience is, and there are rules around different types of entities and when you're deemed to have activity such that you need to file a tax return. And so that's black and white, whether it's a partnership or an S corp. But generally speaking, just getting a tax ID number doesn't mean you have to file a tax return.
Right. And more specifically, I'd asked you like, hey, it's 2021, it's the last couple weeks.
Yeah,
I'm
that's a
just
good question.
getting ready for 2022. If I go ahead and get my EIN number, set up my LLC, does that mean, and I have really no activity, am I going to get, a notice saying, yeah, where's your tax return?
Yeah,
for
I would
20
say, in my experience, the federal government does not send out notices about tax ID numbers because a lot of people get tax ID numbers and they're dormant. They don't use them.
Mm-hmm.
So I think that's why. State's different. Once you form a state account and say, I'm going to file corporate income and franchise tax, like in Louisiana, or I have sales tax, they are expecting those returns from you. And I think it's because those are very specific accounts. Like you might say I have a withholding account, payroll, or a sales tax account, or a corporate. Like they're expecting those types of returns to be filed, sales tax, payroll, income tax. Federal government, you can go to a tax ID number. You don't even tell them what you're doing with it. In fact, when you do the application, you can just say I started a new business or I'm using it for banking purposes. Like you don't have. So I think the expectation is there's so many things you could do with a federal tax ID number that you may or may not have a business that's starting it. It could be 2 years down the road.
Right.
So I think that's the biggest thing with federal. Not so much when you get the tax ID number, but when you have activity in that entity. So activity being income and deductions.
Yeah.
You're just putting money in an entity and you're not doing like if you form your LLC tomorrow and before the end of the year you put $5,000 in a bank account, you don't have any activity that would make you have to file a tax return. You don't have any income or expenses. You just have capital in.
Yeah.
Nothing.
Yeah.
But if you got to that state side and told
that's
them
not $5,000 that's counted as revenue.
Correct.
Then I know taxes on.
Right.
Okay.
That's right.
Yeah. All
That's just you funding the business. Nothing's happened really.
Okay.
Now, fast forward, first couple of days of 2022, you spend some money on do this or that. Now you have activity. You have to file a tax return.
Okay.
Yeah. But I would just point out it's the states. In my experience, when you start telling them I need specific accounts, they are looking for those returns because they ask you, okay, when did you have payroll? Like when you fill out that, I had payroll starting December 26th. Well, now they're expecting a fourth quarter payroll tax return. So just be aware of that.
Yeah.
You can always go back and get accounts. That's another thing. With the state, you can always go back and say like, oh man, I had an employee for a month. I was withholding from them like because I knew I had to, but I don't have the account yet. Then you can get the account. So the states are the ones that can trip you up because you have to. They send those blanket notices like, "Hey, you owe $1,000."
Yeah.
Yeah.
Okay. And I guess I don't know. I mean, any recommendation on it? Do you think there should be overlap? Like trying to have like this clean break seems kind of complicated. Like,
Right.
do you just in most cases practically does it make sense to just like just consider? I mean, just overlap things and be fine. Or
I like the clean breaks.
Yeah. Okay.
I do. They give clear beginning and ending. A year end's a great. I mean, obviously sometimes you can't. It's not practical. You got to do things, but when you can plan for it, a year end break's great. Because if you end something in the middle of the year, then your tax returns due at a date you weren't expecting. So like an S-Corp tax returns due 2 months and 15 days after the year end. Well, if you end on June 30th, now your S-Corp tax returns due September 15th. Or let's just say you end, make it even weirder, October 15th. Now your S-Corp tax return is due, what, January 15th? Like you're not expecting that. It's off the radar. Like that's where people get tripped up and they don't file and they get penalties. So if you can manage it, year ends are great.
Yeah.
Because they coincide with your cadence of tax filing.
Would this make sense too? Even if like practically you shut the business down, but you don't file that shutdown to the end of the year.
We do that a lot.
Okay.
We'll do that a lot with
I'm
companies.
starting to understand the
Yeah,
game.
well, if they didn't dissolve, like if they really didn't physically go to the Secretary of State and say, dissolve my LLC or dissolve my my corp.
They may have moved the money to the
They may have, for all intents and purposes, they've dissolved it. They have no activity.
Yeah.
But yes, it actually is kind of an easier thing. And I tell clients, it's like, look, if you can wait, just wait till the end of the year. That way the tax return falls in line with all the other ones. It's not this one-off that we have to remember.
Yeah, it takes a little bit more off that Escalade.
That's
you
right.
know.
That's right. That's right. Good point.
Yeah. All
Good
right.
point. Yeah.
Man, anything else that we need to be mindful of as we're transitioning from one business to another, shutting one down? For the serial entrepreneur out there.
Yeah, who's opening and closing businesses all the time.
Yeah, exactly.
Man, I think we've hit on a lot. It's just be working with somebody that can kind of tell you the little tips and tricks and things to avoid, so that you don't get those notices that are just a pain to deal with.
Yeah.
You know, and a lot of people getting a tax notice is a stressful thing. So
Yeah.
if you can avoid that by just dotting your I's and crossing your T's.
Yeah, I think the most clarity that I got was the like recognizing that there's accounts with the state.
Yeah.
And that clears it up to recognize. It's like, okay, well, if you know that if you open a bank account, you got to shut it down, or
Right.
a credit card, you got to open it, and then there's a little bit of a process to cancel it or
Right.
whatever.
Right.
You know, I think if you know the accounts you're setting up,
Yep.
and to be honest, I don't know that I would know those offhand
Right.
until you just articulated them.
Right.
But yeah, know the accounts you've set up first, and then make sure you're shutting those down.
Yeah, for you.
And to your point, don't start them until you need them.
Yeah. I mean, that's the thing. And I will say this, you know, our state here in Louisiana, I think they think they're doing us a favor. When you form an LLC, somehow they've now got this partnership with the Department of Revenue where it's like, hey, while you're forming the LLC, you want to form a sales tax account, want to do a pay, like it's great. It's all in one place. And like I've had so many clients get tripped up by that.
Yeah, it's like GoDaddy. Like,
Yeah, you're
do you
like,
want
oh, great.
Yeah, SEO
Well,
package, you
one-stop
want this?
shop.
Yeah.
Great. Boom, boom, boom. Check, check, check. Next thing you know, a quarter goes by and they go, hey, I got a notice filing sales tax. I said, well, when you formed your LLC, did you get a sales tax account? Well, yeah. That's the reason.
Yeah.
So now you got to go back, tell them you don't owe the $1,000,
Yeah.
tell them to shut it down. Like,
Yeah, it's like when you open a bank account and then you don't put any money in it, and
Yeah.
you start getting service fees.
Correct.
You know?
Yeah, it's like, what the hell? Yeah. So that's a good point that you're bringing up. But what I said was, you can always go back.
Yeah.
Yeah, you're withholding money from people, like a couple weeks later, just go form a withholding account.
And that might trip some things up a little bit with Gusto, because don't they need those?
They do. Gusto, yeah. But I've seen before where you put the wrong one in. Like, you can work around. You can put the wrong one in, and a couple weeks later go back, oh, man, we had to change we fixed it.
Okay.
We did that on some state unemployment. Don't quote me on that for withholding, because now I'm thinking like they pay withholding.
That's real in the weeds. Anyway.
Yeah. They pay with that's right. We don't need to get into that.
Yeah. All right. Well, those are some good tips if you're moving things around, especially if you're doing that at the close of the year, start of a new one. So we'll end it there, and Happy New Year to everybody out there listening.
Merry Christmas.
Yeah, that's right.
That
well,
too.
This is gonna come out post Christmas. Yeah. So
Happy New Year.
Happy New Year.
All right, guys. We'll see you next time.
All right.